Welcome everybody. In today's video I will explain the PM Silver Bullet. I will talk about this trading model with my presentation which I created. Okay, so this is the PM Silver Bullet explained, an in-depth explanation about the PM Silver Bullet trading model. The content of this lesson will be what this trading model is, everything you need to consider when taking this trade. We will talk about the liquidity grab, the break of structure and the change of character, the displacement, the fair value gap, and then we will start to give some trade examples. What is it and why do I trade it? The PM Silver Bullet, but in general the Silver Bullet, is a time-based algorithmic trading model. Time-based means that this model occurs each day at the same time range in every asset. For example, Forex, CDFs, and futures. The PM Silver Bullet setup, the only one that I personally trade, usually presents itself between the 2 p.m. and the 3 p.m. New York local time. This setup involves in many rules. This is one of the reasons why I like this setup. It makes it difficult for you to blow your account in just 1 hour a day of trading. Most of the time, the risk reward is higher than 1. If it is lower than 1, the trade is not valid for me. Every day, if you are consistent and experienced enough, you can secure 10-20 points, this on NAS 100. Everything you need to look for to take this trade. You need to understand where the next liquidity grab is going to be based on higher time frame targets. You need to wait for a break of the market structure if you're going with the trend, or you need to wait for a change of character, in this case a market structure shift within the Silver Bullet hour. The break of structure should be done by a strong displacement, and it should also create a fair value gap. This fair value gap then will be the place where you enter the trade. If price, before breaking the market structure, took out a liquidity zone, the probability to win the trade will increase. Now we will analyze these one by one. So where is the next liquidity grab? It can be the previous daily highs and lows, the previous session highs and lows, and the previous week highs and lows. These are the most common points of liquidity. And I created here some examples which shows a liquidity grab on equal highs, a liquidity grab on equal lows, and also a trendline liquidity. These are examples on the chart. In the left, 2 equal highs, which then got taken out, and in the right, 2 equal lows, which got taken out, and we see price then start to reverse and go in the opposite direction. With this part, I will explain the difference between the break of structure and the change of character. The break of structure happens when the price breaks its previous high in order to create a new higher high in an uptrend, or break its previous low to make a new lower low in a downtrend. So basically it is a continuation of the trend. As you can see down, I made the example of a bullish break of structure and a bearish break of structure. The change of character occurs when price breaks its previous lower high in order to create a new higher high in a downtrend, or break its previous higher low to make a new lower low in a downtrend. So basically it is a change of the market structure. Down in the right, I made the example of a bullish change of character and a bearish one. I usually use also the closure of the candle and also the way the displacement form to understand if there is an actual break of structure or we are just seeing a simple liquidity grab. The displacement is a strong move of the price which leads to a new break of structure or to a market structure shift. Usually it indicates who's taking the control of the next direction, so in fact bulls or bears. In the right here we see an example of a liquidity grab, a displacement and a break of structure. The fair value gap shows us the inefficiency or imbalance present in the market. It usually forms after a strong buying or selling pressure, so usually it presents itself after a displacement move. Price tends to feel every kind of inefficiency in the market, but we don't know when this will happen. We have here an example of a fair value gap which then got filled and price started to drop again. This could be an example of a trade also. Now let's put it all together. This is the first trade example. This is the 1 minute chart. So we have a displacement which create a break of structure and leaves a fair value gap to fill. Here I marked the low of the lunch session. As you can see, price during the PM hour after 2 p.m. price start to bounce back up to fill the fair value gap, and then it start to drop until it take out the liquidity of the lunch low. This trade was a 4RR, as you can see. This is trade example 2 on 3 minutes. We have the morning lows, which is our target. We have a break of structure caused by a displacement, we have also a fair value gap. As price fills the fair value gap, we enter, stop loss above the previous swing high, and take profit can be at the morning low. This is a very easy 2RR. Trade example 3. I wanted to clarify that all these examples are on NAS100. Here we have a change of character before the PM silver bullet hour start. Then price go back down to fill the gap which was left behind, but it didn't break the structure. Then with the start of the PM session, we start to rise again, and we leave this fair value gap unfilled. Because of the fact price changed the character of the market structure here, in this case we are searching for buys even if price didn't break the structure of the previous swing high, because in fact it did it here. We can have two targets in this trade, the lunch high, which is here, or the morning high, which is here. So when there is something like this, you can have two different take profits. So your first target will be here, and then you set the stop loss at break even and you leave it to go. And in this case you would have been stopped out at break even with the runner which you left. I forgot to write it, but it was a 1.5 RR. So this video finished here, and I hope you understood everything about the PM silver bullet. The silver bullet, it's not that difficult, but you need to make the eye on which is the next liquidity grab and also which is the right fair value gap to enter. So thanks again, and we will see you in the next video.